So far what you have heard is about the GCCs. I think I'm not a GCC expert. I myself am an ex-banker. I'm right now working with Government of India, trying to develop GIFT IFSC. What is GIFT IFSC? How many people in the room have heard about GIFT City? You are from Gujarat. So very few of all that are left. Let me put that way. See, GIFT City is something that is work in progress, something that will tell you about how government is thinking. Some of the points which have been elaborated earlier. So let me just give a context. I do not want to or do not need to tell you about what India is doing, where do we stand, where our conglomerate stands. I think India is making strides after stride, growing significantly fast. But if you look at any tall economy, some numbers if we think about, I say that today India's population is more than the population of Europe and America. A country of this size, with working age population, going to stay young for next 20 years, and other countries' working age population declining, is demographic dividend in favor of us? I think yes, it is there. Now, but what is our dependency? How are we growing? Okay, we are 4 trillion now, we want to be 5 trillion, and as per different estimates, people are saying that we will certainly become 30 trillion plus economy with the conservative estimates. For an economy of this size, this shape, which has put so much of enablers in terms of policies so far, whether you talk about the manufacturing, PLI, services, infrastructure, India has taken a lot of strides. But this is not where we have to stop. What do we need to go further from here? We need investments. Investments which will come into India from different jurisdictions. Now, what is India's dependency today? If we're talking about GCC, we're providing services to the world. But what are we providing? We are the lowest segment in the entire game today. We are providing services. Now, in the services also, when we think about, there's a different segments of service. Now, take example again, that India's export on services, you all know tech contributes to almost 50% now. What is the contribution of financial services in export? Less than 2%. That is where India stands. Take a just comparison. The population of Singapore, 6 million. Population of Ahmedabad, 8 million. What is the share of Singapore in financial services export? It ranks third globally. Now again, deep dive further into it. In Singapore, they have 1200 funds. Of these 1200 funds, 76% of investment that they're being originated from outside Singapore. 88% of investment they are making are outside Singapore. So what is Singapore thriving on as a nation? Other nations. What does India has? India has the end destination where these investments are flowing. But our dependencies on Singapore, Mauritius, Cayman, Luxembourg, when investments have to come into India. At the same time, when you think about banks, Indian banks, PSU banks, private banks, they go out to give loans to Indian conglomerates. We are from Adani. Adani was borrowing from Indian banks, branches in Dubai. So that is the dependency. Why Indian banks have to go outside? Why funds have to go outside? There's a large ecosystem why Indian students have to go outside, why those universities cannot come into India. These are very first principle-based thinking on which GIFT IFSC has been formed. So what is GIFT IFSC? GIFT IFSC is a very small area, about 900 acres. Out of this 900 acres, 73% is domestic zone, just like Bangalore, Hyderabad. Only 27% is a special economic zone. Is a distinct special economic zone. A special economic zone where you can service only the financial services, tax services. So it's a special economic zone, and probably the only one where the tax holiday is there, with a difference. Earlier special economic zone used to have tax holidays, which saw the sunset clause in 2020. GIFT IFSC is the one for whom this tax holiday started from 2015 onwards. People in the earlier panels, they discussed about sustainable. GIFT IFSC is India's first smart operational city. All the buildings are platinum rated. For people in Bangalore, people talk about, I met some consultants in external meetings today. They talked about how Telangana is pitching to GCCs globally. And they just asked that you want to come to Telangana, people say that you want to go to Bangalore. All they ask is, please visit Bangalore and go from airport to Electronic City and come back the same day. And then you can see Telangana's offering. So it's the logistics that Telangana is offering. In GIFT City, if you look at the presence, Airport to gift city is 15 minutes. If you want to go to, your kids want to go to school, they're within the gift city. Hospitals are within gift city. Five-star hotel are within gift city. Ahmedabad is 15 minutes. Gandhinagar is right there. So effectively, it's a very seamless logistics which is working there. 16th of this month, Honorable Prime Minister, he inaugurated the metro in gift city. So metro is going to connect Ahmedabad to GIFT. Why it's relevant? Because it will help the movement of talent. And Ahmedabad and Mumbai will be the high-speed rail corridor which is coming up in a couple of years. Once that is launched, it will be possible to travel from Mumbai to GIFT City, probably in a similar time as you take for the flight end-to-end basis. Just for you to understand the difference, what is gift city and why we say it's different, is that in gift city you have capital control doesn't apply. What does it mean? All of us, we are in India, we are governed by a financial regulator, Reserve Bank of India, SEBI, IRDA, PFRDA, four financial regulators. They govern India. IFSC has been formed by Government of India as a unified regulator in GIFT IFSC, which has joint regulatory power of all the four regulators, but only for GIFT IFSC. So we are a regulator, we sit under DEA, Ministry of Finance, Government of India. And what do we offer? We offer that if entities are doing business in GIFT, it's the FEMA offshore zone. What does it mean? That only business you can conduct is in foreign currency. You cannot conduct business in rupee. Means your revenue will be dollar. However, the expenses for you, the rental, the salaries, they are all going to be rupees. So expenses rupee, revenue dollar, so that you don't have to make the FX adjustments here. Tax, you're resident, but there is a tax framework we have created. One, we spoke about tax already, and we speak about another one. Legally, you're a resident, but when you enter into agreement with the foreign entities, typically foreign element comes, you can do this decisions. We spoke about it briefly. I will not go into detail of the slides here, but effectively, what GIFT City is not only about GCCs or tech companies. What GIFT City is that we are trying to bring the banks. We have 30 banks, the all leading Japanese banks, European banks, Singaporean banks, Australian banks. They have already established their branches. The BRICS Bank, which is a multilateral bank, it has set up its regional office in GIFT. Then you have exchanges, NSE, BSE have their exchanges there. You have bullion exchange, India's first bullion exchange, probably third in the world after London and Shanghai has been opened in GIFT. And just to understand the impact, all the bullion that we import, you and us buy. You have any idea where the pricing of that bullion is decided in the world? Any idea where the pricing of bullion is decided? London market. How many people decide? How many institutions decide the pricing? Less than 10. India is the second largest consumer. China is the largest consumer of gold. No pricing power. Time has come and probably we need to bring some of these pricing power, the ability to make pricing, whether it's rupee. You know that before GIFT City came, India had lost the derivative of rupee to outside India. What it means? That outside India, dollar rupee derivative were higher in volume than dollar rupee derivative happening in India. What is the risk? Risk is that the monetary policies, the fiscal policies can be hijacked when the pricing of rupee is determined outside. Now we have been able to bring the pricing power back. Derivatives are being traded in volumes, almost $1 billion volumes in GIFT City. The margin of dollar rupee outside was 1 rupee, which has contracted now. So a lot of things we are trying to bring back. What we are trying to do, what we are saying that whatever has gone outside India, we want to bring it back into India, onshore the offshore, make Indian companies more competitive, try to bring efficiency in Indian ecosystem, whether it's capital market, in the fund ecosystem. We have established global funds, the Morgan Stanley's, the RDA sovereign funds into GIFT IFSC. So there is a lot of fund, and all of these sectors that we are talking about, somewhere will cut across the GCC ecosystem that we will speak about shortly there. Then you have insurance, you have financial markets, aviation, foreign universities. Significant amount of Indian students, 8 lakh students, they are out of India, right? They have gone to foreign universities. Their revenues, we have enabled foreign universities in IFSC. Now, Australian universities have opened off branches in GIFT IFSC. They're offering advanced postgraduate programs, same standard as Australia, at half the price in GIFT IFSC, and they have already launched the programs. Two such programs have already been launched. We are expecting some more universities from London to join. In time to come, you will see where thousands of such students are going to graduate in advanced courses like cybersecurity from GIFT. Some of the numbers I will not go into that, but at a very high level, what we are going to say that we have almost 700 plus entities in GIFT now. Total employment is around 26,000. Out of this 26,000, around 13,000 employees are from the tech ecosystem. Which companies are present there? A brief on the slide. You can see the banks first and the funds. Service providers, all the enablers, we have enabled regulation for them also. Then you have the likes of Bank of America, we have kept in other, because Bank of America opened the GCC in GIFT. Initially, they came in 2021 for 400 employees. They have scaled up to now 2,200 plus employees in this ecosystem. Then we have recently licensed Wipro. Now, another Indian tech major is coming down. We have given license to one more, again a peer company, and other leaders are also in discussion with us. Then you have Adani has some group companies there, Reliance have group companies there, in aviation ecosystem and other ecosystem. So we have all these companies. On the right side, IBM, Google, Capgemini, TCS, GG Tech, the advanced gaming company, Infibeam Avenues, you know that company, the payment company. All these companies are the domestic zone of GIFT City. So the point here is that why I have to keep this slide is that typically whenever I complete the presentation, people ask me about the talent. So I kept it in the upfront that okay, people are there and they are tech people, they are present in the ecosystem and they are already making the P9. Why people are coming there? Now when we looked at ecosystem, we said that people go out only for three reasons. One is either the regulatory enablers, regulatory jurisdictions. Second is about tax enabler, tax incentives, or they go out because of quality of life, ease of doing business. Quality of life, India has what it has, but we'll talk about it briefly about what you have in Gujarat, Gandhinagar. But look at the tax incentive. First tax incentive that we gave is that any entity that established in GIFT, they will get zero tax on business income for a block of 10 years out of 15 years. What it means is that initially when you come, maybe initial years you will not have any profit, so you will anyway not claim tax. So 3-4 years you will lose there because of depreciation curve, whatever it is. Effectively for the larger part of 15 years, entities will be able to enjoy the tax holiday. So there is no tax holiday on business income. Then there is MAT withholding tax. We have kept on these. There is some concessions there. Then you look at, certainly there are no GST applicable if you provide service into GIFT or outside India. Then it's a combined zone. It's a central government project, but it is overlapping with the state government policies as well. So state government policies provide you embedded advantages. For example, IT and ITES policy of state government. It provides you some advantages we talk about, and these are some of the state policies. They say that when you incur OPEX, 15% of the OPEX, 25% of the CAPEX, OPEX for a period of 5 years, CAPEX one time paid over the 5 years, is provided by government of Gujarat. Then when they hire the employees, PF, provident fund part of the employee, 100% for female, 75% for male, will be provided by government of Gujarat for a period of 5 years. When employee want to train, there is a direct transfer up to 50,000 into their account. First month salary, half salary provided by the government for the first time employee hired. So this is very equal. I've kept a very brief, but I think in the end of slide, which we'll share with ELTS team, you will have the QR codes from where you can download all these slides. Now I think top line, I think I need not discuss on the top numbers there. You know these better than me. But we talk about what are the advantages there. We speak about the tax, ecosystem advantage. But people talk about the talent piece as well. And case we talked about 17 lakh engineers getting graduate. 5% of these graduates, around 80,000, are graduating from Gujarat engineering colleges. And some of the names that you're seeing here, with the Deakin University, Wollongong University from Australia, IFT, these are the entities which are present within GIFT. Then around GIFT, we have a knowledge corridor within a radius of 2 to 3 kilometers, where you have triple IT, you have the universities, We have almost around IMA certainly is present there, NMI is present, and Mica is present. But effectively, we are saying that Dhirubhai Ambani College is also present there. I think there are almost around 12,000 students in the periphery of 2 kilometer radius. That is the student pool coming there. I'm not talking about the lateral. What's happening on the lateral side is within GIFT, the entities which are coming, they're also generating the employment. I'll pause on this slide. Effectively, what GIFT City offers today, it provides you the infrastructure, space for growth, the ability. I think if you put simply, a place probably where one can travel from home to GIFT in around 15 to 20 minutes for a distance of 15 to 20 kilometer. And if your kids are within GIFT, then your office to school will be around 5 minutes, airport will be around 15 minutes. I think these kind of pitches should be good for Bengaluru. But I think I will be ready to share this information. I will open for some questions if required. Thank you.